Boise Health and Life Insurance Agency www.goidahoinsurance.com 208-409-3382 How to plan for long-term care issues with life insurance. www.goidahoinsurance.com Statistics tell us that 70% of people over age 65 will require chronic care later in life and on average for about 3 years. Some will need care for about 5 years or longer, about 20%. Long-term care is expensive. About $85,000 annually for a semi-private room, and that figure is only going to increase. Unless you have had a chronic illness either in the family or close friend, many people don't even realize they need this coverage. Most of our clients have had an experience with a loved one and watched them deplete their assets. I am experiencing this with my sister, whom we just put into an assisted living home. Others cannot seem to buy a policy because they just don't think they will ever use or need it. You may just see long-term care insurance premiums as an expense. This thinking is where younger, healthier people, the ones who really should buy it, because they are healthy and the policy is still affordable. But you don't buy a policy like this for yourself. You purchase this for your family and loved ones. So, if you ever have a chronic illness or condition, it doesn't throw their lives into chaos. Just ask around, friends and family, if they have ever had an experience taking care of a loved one. You will hear amazing and sad stories that you had no clue what they were going through. But what if you could have a long-term care rider on a life insurance policy? Now you have a policy that you know for sure, if you keep it, will pay someday. Either in long-term care payments for service or a death benefit, and they can pay both through the life of the contract. Here is an example of how the policy would work. This is a sample scenario. Please get a quote for your particular situation. Case study. Here is an example of how a long-term care rider on a life insurance policy would work for me, and let's assume I am a healthy 40-year-old male. I purchase a $500,000 death benefit universal life insurance policy and plan to pay $275 per month. This policy provides my loved ones with a sum of money at my death. I also purchase an LTC rider on the same policy. For his maximum rider benefits, I select a cumulative LTC benefit of $500,000, which allows me to access my entire life insurance death benefit early for long-term care services, a monthly LTC benefit of 2%, which allows me to receive up to $10,000, 2% of $500,000 to reimburse his covered long-term care expenses. If I die at age 50, my beneficiaries will receive the full $500,000 death benefit, $467,000 more than his $33,000 total premiums paid. If I die at age 60 before needing long-term care, my beneficiaries will receive the full $500,000 death benefit, $434,000 more than the $66,000 total premiums paid. If I need long-term care at age 70, and I use 2 years of maximum benefits and then die, I will have taken $240,000 in long-term care rider benefits. The remaining $260,000 will be paid to my beneficiaries as a death benefit. Also, I will have kept his estate intact because I didn't have to tap into my assets to pay for my long-term care. If I need long-term care at age 70 and use the full $500,000 death benefit to reimburse myself for long-term care services, I will stop receiving benefits. At this point, I will have to tap my assets to pay for his long-term care, but by having the life insurance policy, I didn't have to tap into $500,000 of his assets for at least 4 years. This type of policy is self-completing. You see, live, die, or quit, you will have or receive a benefit out of this policy. If you live and need long-term care service, you have coverage. If you die before receiving long-term care, you receive the death benefit. Lastly, if you hold this policy for several years, typically cash value will build up inside the policy and you may be able to surrender the policy and possibly receive all or most of your premiums back. Call the office today for your personalized proposal.